Hi, Dwayne Burnell back with you. Today I'm going to cover question number 3 of the questions that I wish my clients would ask me, but don't. So here it is. Question number 3. Do I have a growing tax liability in the future? The short answer is absolutely yes. Now let me explain. As a baby boomer or retiree, you might not have thought much about the draining impact of taxation on your retirement income. The theory goes that you'll be in a lower tax bracket in retirement, so who needs to worry about this? But the reverse often happens. With fewer deductions and more income, you end up being the perfect taxpayer. What I often see is that for people when they plan for retirement, they don't understand the amount of income tax they're going to have to pay. To plan appropriately, you need to know how your retirement income will be taxed. Let's talk for a moment about one common scenario. To keep it simple, I'm going to focus on the impact of income tax on ordinary income. Ordinary income is composed of mainly of wages, salaries, commissions, interest income. So back to our scenario, when you put your money in a qualified plan like a 401k or 403b, you don't pay ordinary income tax on this money at the time you put it in your qualified plan. You might think that you are saving the tax you pay on this money, but, and this is really important, you are not saving any tax at all, but you are simply agreeing with the IRS to pay the income tax on this money sometime later. Also, you defer the calculation of how much tax you are going to pay when you withdraw the money. Make no mistake, you will end up paying ordinary income tax on this money when you withdraw it in retirement. When you retire, you also begin receiving Social Security benefits. Do you realize that up to 85% of your Social Security income may be subject to income tax? This is because the IRS classifies Social Security income as 100% ordinary income. So your Social Security benefits are then added to your qualified plan income as taxable ordinary income. And if you have other income, let's say from a rental property, the IRS classifies this as ordinary income too. When you add up all your ordinary income from your qualified plan, be it a 401k or 403b or an IRA, with your Social Security benefits and your other sources of ordinary income, you might have quite a bit of income, but you don't have many deductions. Then you have a very good chance of paying more income tax than you had ever before. My job is to help my clients understand their tax situation, and trust me, that's a full-time job. I'm not a tax advisor, but I believe managing your taxable income will equally be as important as earning a rate of return. By strategically managing your taxable income, you will be able to keep and use more of your money to enjoy retirement. When I think about my retirement, I don't want to worry about having enough money to pay my monthly bills or future medical expenses. Instead, I want to travel, enjoy my hobbies, and live life free from money worries. If you are concerned about managing your taxation in retirement, I want you to know you are not alone. I work with individuals anywhere in the country, and I'd gladly set aside 30 minutes to have a private phone call with you. I find this phone call is helpful for you and I to discover a little bit more about each other. I certainly will not try to sell you anything, and there's no obligation on your part. Think of this phone call as a way to see if we are a good fit for each other, a complimentary consultation, so to speak. So here's what you need to do next. For your convenience, I've included a button directly below this video. If you click on it now, you'll be taken to a short form that you need to fill out. It's just enough information to give me a clear picture of how I can best be of service to you so that no time is wasted during our 30-minute call. For those of you that would rather call my office directly, I've included my 800 number below. The form will take you no more than 5 minutes to fill out. So go ahead and click on it now, and I'll talk to you very soon.